Hi, hello, welcome to 1 Min Fin. Through this video, I would like to give more simple and detailed explanation about mutual fund. I am planning to do this video in two parts. Your support will be a great motivation for me to bring valuable contents again. So do subscribe our channel. Let's grow together. Please do watch the video carefully till the end. I am sure all your doubts about mutual fund will be get cleared. Before explaining about mutual fund from its definition point, I take a minute to give a rough idea on it. That will help you to understand its definition fully. So in simple terms, mutual fund is an investment option. I stress here the word investment because investment is different from savings. Even though we use the terms interchangeably, investment and savings, but both are different. Savings is what you save in your savings account in your bank. It's totally risk-free and gets very little return based on the interest rate prevailing in the market. But investment is what which let your money to make money or which let your money to grow. Yes, here risk is there and the return is also pretty high. Okay, so here the mutual fund is an investment. Okay, now let's see the definition of mutual fund. A mutual fund is a professionally managed investment fund that pools money from many investors to purchase securities. This definition is not enough to get clear picture of the mutual fund, right? Okay, let me explain. See this diagram. There are four highlighted keywords here: investors, fund manager, securities and return. First, let's see what all these four highlighted keywords. So, the investor. Who is an investor? Investors are simply you and me, or it may include some foreign institution or domestic institution. Simply it means who brings in their money for investment. Those are investors. Fund manager is the expert in this scheme. He is responsible for implementing a fund's investment strategy and managing its trading activities. He analyzes, conduct researches and make important investment decisions to get better return. And mutual fund investments will be in various type of securities like equity, bonds, government securities and debt instruments. And the returns are what we get back out of our investment. That may be in terms of growth or capital gain returns or maybe interest returns. Now see this diagram. What happens here? Here fund managers pool the money from investors and fund managers make proper analysis and study and they invest in the securities which generates good returns and fund managers pass these returns to investors and they will charge you for their service. I hope the concept is clear now. Mutual funds are classified in various types based on its time, its objective, type, etc. But if you understand these three basic types, all other will be easier for you. So, here it is three types: equity based fund, debt based fund and balanced or hybrid fund. Equity based fund. An equity fund is a mutual fund scheme that invests predominantly in shares, stocks of companies. They are also known as growth funds. Equity funds are either active or passive. In active funds, fund manager scans the market, conducts research on companies, examines the performance, and looks for the best stocks to invest. In passive funds, the fund manager builds a portfolio that mirrors popular market indexes, says Sensex or Nifty 50. Furthermore, equity funds can also be divided as per its market capitalization. How much the capital market values and entire company equity. There can be large cap, mid cap, small cap, etc. Also, there can be further classification as diversified and sectoral thematic fund. In diversified, the scheme invests in stock across the entire market spectrum. But in case of sectoral thematic fund, it is restricted to only to a particular sector or theme, say IT, infrastructure, etc. Thus, an equity fund essentially invests in company shares and aims to provide benefit of professional management and diversification to ordinary investors. A debt fund. A debt fund is a mutual fund scheme that invests in fixed income instruments such as corporate or government bonds, corporate debt securities and money market instruments, etc. that offer capital appreciation. Debt funds are also referred to as fixed income funds or bond funds. A few major advantages of investing in debt funds are its low cost structure, relatively stable returns, high liquidity and reasonable safety. Debt funds are ideal for investors who aim for regular income but are risk averse. Debt funds are less volatile and hence are less risky than equity funds. If you have been saving in traditional fixed income products like bank deposits and looking for a steady return with low volatility, debt mutual funds could be a better option, as they can help you achieve your financial goals in more tax efficient manner and therefore earn better returns. Understanding the difference between equity and debt is important here. Say for example, if a company want to raise some capital, they can either go for equity capital or debt capital. What is equity capital? It means the company sells a portion of its as shares and it gives to investors and raise money out of it. So they lose some ownership of the company but they receives a capital in. And in case of debt, they collect or bring in some money from the outside people. In return, company pays interest to them. In this case, company doesn't lose its ownership. This is same as company receives in capital as loan from outsiders. Okay, now the third type of mutual fund is balance fund or hybrid fund. This type of funds are the mixture of equity, debt, and it invests in more than one asset class. So as it is less riskier and with better returns. So why do we need mutual fund? There are n number of advantages are there in mutual fund. If I go through it quickly, it's liquid, it is diversified, experts manages it, and is flexible to invest in smaller amounts, and accessibility of mutual fund means mutual funds are very easy to buy and schemes for every financial goals, and it's safe and it's transparency and it's comparatively low cost and it has best tax saving options too, and it's lower tax on the gains and lock-in period also lowers. I hope you have got basic idea about the mutual fund. And I know now you are thinking how to invest in a mutual fund, how to select a best mutual fund. Then don't worry, I'll be doing a second part of this video. And hey, please don't forget to subscribe our channel and please like and share our video. And if you are having any further queries, please comment below. Thank you.